Assalamualaikum, and today we are going to present our assignment about annual report analysis. The first thing that we are going to present is the introduction of the company and the industry. Second one is the MFR analysis with the comparison of MFRS, and the last one is conclusion from the analysis. So we are having four presenters here, which is start with me, Mohammed Syazwan, and followed by Luqman Hakeem, Mohammed Hafiz, and last one is Mohammed Arif. The industry given in the question is construction and ICT. Construction is something that related with infrastructure, building, and mega project. It's become one of the important aspect to other economy sector as well. The economy are expected to surge up in 2021 since due to the decreasing GDP in 2020 as much as 20%. The ICT is something that related with cybersecurity, data system and technology related that contributed in Malaysia GDP amount 289.2 billion ringgit in 2019. It became the main drive of economy in Malaysia since it's implemented in Malaysia National Industry 4.0 policy. The company that we chosen in this is UiTM at Kenta and Maxis. Maxis Berhad is founded by Ananda Krishna in 1993 and was listed in Bursa Malaysia on 11 November 2009. The product they serve to its consumer is coverage network, high-speed internet Wi-Fi, and cloud database for entrepreneur. The achievement they get is the one famous hotlink brand for prepaid user, and they launched a Malaysia first satellite, which is MESAT 1, 2, and 3. Next is UEM at Ginta Berhad, which is known as Faber Group Berhad, and is a listed company founded in 1995. The product they serve to its client is service on asset management by offering a consultancy service and solution of an asset. And the achievement that they hold currently is the largest highway maintenance operator in Malaysia. So now I will pass to Luqman Hakim, and thank you.
Assalamualaikum, my name is Luqman Hakim. So now let's move on to the comparative analysis of UEM Agenta Berhad and Maxis Berhad. For the first one, we will provide analysis of the differences and similarities which regards to statutory and disclosure of the requirements. From our findings, we discover that there are similarities in applying MFRS 2 in terms of implementation. UEM Agenta Berhad has implemented MFRS 2 in the annual report, and so as Maxis Berhad. For the types of share-based payment, for UEM Agenta Berhad, the company uses equity-settled share-based payment for the groups of employee, and it recognizes the cost of investment is recognized over the vesting period to equity. As for Maxis Berhad, the types of share-based payment is share options, and if exercised, it will be transferred to any equity net of any directly attributable expenses. Next is on the MFRS 119, which is employee benefits. So for the similarities, both company uses short-term benefit plan and defined contribution plan for the employees. Short-term benefit plan, it is recognized as expense in the year in which the associated services are rendered by employees, and it is recognized in SOPL. And for pension costs under defined contribution plan, both make contribution to employees pension fund, in other term EPF, and it is recognized as expense in the SOPL. That is all from me. I pass the next slide to the next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Hafizuddin bin Muhammad Azim, and today I will explain about MFRS 9, MFRS 132, and MFRS 7. For MFRS 9, basically, both company UEM Agenta Berhad and Maxis Berhad will classify their financial assets based on fair value to other comprehensive income, fair value through profit or loss, or amortized cost. And the classification will depend on the entity's business model for managing the financial assets and the contractual terms of the cash flows. Next, UAM Agenta will classify will recognize their financial liabilities based on fair value through profit or loss, loans and borrowings, or payables. Meanwhile, for Maxis Berhad, the company will recognize their financial liabilities based on fair value through profit or loss, other financial liabilities, or financial guarantee contracts. For MFRS 132, UAM Agenda Berhad will recognize their financial assets on amortized cost if both of the following conditions are met, which are the financial asset is held within a business model with the objective to hold financial, or the contractual terms of the financial asset give rise on specified dates to cash flows that are solely payments of principal and interest on the principal amount outstanding. In Maxis Berhad, the company will classify their financial assets based on amortized costs if the assets are held for collection of contractual cash flows where those cash flows represent solely payments of principal. Next, UAM may also recognize the financial assets based on fair value through other comprehensive income if the financial asset is held within a business model with the objective of both holding to collect contractual cash flows and selling, and the contractual terms of the financial assets give rise on specified days to cash flows that are solely payments of principal and interest on the principal amount outstanding. As for Maxis Berhad, they measure their financial assets at fair value through other comprehensive income for assets that are held for collection of contractual cash flows and for selling the financial assets, where the assets cash flow represents solely payments of principal and interest. After that, UAM Berhad also may recognize their financial assets based on fair value through profit or loss if the financial assets are held for trading. Financial assets designated upon initial recognition at fair value through profit or loss, or financial assets mandatorily required to be measured at fair value. Financial assets are classified as held for trading if they are acquired for the purpose of selling and repurchasing in the near term. While in Maxis Berhad, the group and the company stated that the assets that do not meet the criteria for amortized cost and fair value through other comprehensive income are measured at fair value through profit or loss. A gain or loss on a debt investment that is subsequently measured at fair value through profit or loss is recognized in profit or loss and presented net within other operating expenses in the period in which it arises. For financial liabilities, UAM Berhad will classify their financial liabilities through fair value through profit or loss, which comprises financial obligations retained for trading and financial liabilities labeled as at fair value through profit or loss at the time of initial recognition. If financial liabilities are incurred with the intention of repurchasing in the near future, they are also characterized as held for trading. Meanwhile, in Maxis Berhad, their financial liabilities only consist of other financial liabilities, and other financial liabilities in Maxis Berhad are non-derivative financial liabilities. They are initially recognized at fair value plus transaction costs that are directly attributable to the acquisition of the financial liability and subsequently carried at amortized cost using the EIR method. Changes in the carrying value of these liabilities are recognized in the statement of profit or loss. Lastly, for MFRS 7, both company will recognize their financial assets, will disclose their financial assets if the right to receive cash flow from the assets have expired, or the group has transferred substantially all the risks and rewards of the assets. Meanwhile, in UAM Agenda Berhad, they will disclose their financial liabilities if the financial liabilities obligation has been discharged, annulled, or expires. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohammed Arif Akmal by Rosli. I am from AC2206K. Now I will present my part, which is MFRS 15, revenue from contract with customers. For UEM Agenda Berhad, evaluate the effects of variable consideration, the presence of significant financing components, non-cash consideration, and consideration payable to the customer when determining the transaction price for contract with customers. Next, for Maxis Berhad, revenue from prepaid service or the telecommunication revenue is recognized when services are rendered, and revenue from sales of devices is recognized at the point in time when control of the asset is transferred to the customer, usually on delivery and acceptance of the device. Next, we go to MFRS 16, which is leases. For UEM Agenta Berhad, right use of asset, the amount of lease liabilities recognized, initial direct costs incurred and lease payment made at or before the commencement date, less any lease incentive obtained, make up the cost of right of use asset. For lease liabilities recognized at the lease start date, based on the present value of lease payment to be made during the lease term. For Maxis Berhad, recognized as right of use assets and a corresponding liability at the date on which the leased asset is available for use by the group. For the conclusion, the board of UEM Agenta delegate the governance of risk management to the Risk Management Committee (RMC) to assist the board in ensuring sound and robust risk management framework (RMF) to achieve the group strategy objective, safeguard shareholders' investment and its assets. The board of Maxis is provided with reasonable assurance that adverse impact arising from a foreseeable future event or situation on the group objective is mitigated and managed. Next, for implication of mandatory reporting, the first one is assess the qualities of the company's performance in the present and predict its future performance. All financial and material information will determine the company's performance. Next, the decision of management and investors. The accurate information to make useful decision making for the interest of the company as a whole. We move on to the implication of voluntary reporting. The first one is reduce the company's competitive advantage. It is because it exposes crucial company's information to the competitors. Next one is enhance the company's credibility among the investors. Investors need to have a better understanding of the company's intention and comprehend the company's true value creating potential. That's all from us. Thank you.